Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Zhang. He's the Chief Strategist at Options Play with an update on trends in the Nordic markets and option strategies to capitalize on them. Tony, it's great to have you with us as always. Thank you for joining us on Trade Talks. Let's take a look at the Nordic market.
Yeah, so today I want to provide a little bit of an update as far as what we've seen this earnings season, which has been a very important data point, and give everyone a bit of a high-level overview of the major Nordic markets and just a couple of opportunities that we currently see as to how to play this market utilizing options. So let's start with talking about the biggest market, the Stockholm, the OMX S30 index. So we've referenced the 1500 level a few times over the last few trade talks. The market is sitting just above this major support level, and momentum is clearly starting to fade a bit. We see that the risks right now skew a bit more to the downside. So the level that we're really watching here on the Swedish markets is that 1500 support level. If it breaks below that, we really see this as going back into more of a bearish view, especially if momentum and volatility starts to pick up for this. And next, what I want to take a look at is the Danish markets, which look significantly stronger and a little different than the Swedish markets. And in a few minutes, we'll take a look at the earnings for this market. And I think that's going to help us understand as to why we see so much strength in the Danish markets versus the other Nordic markets. Because right now, the Danish markets are sitting actually above its 20-week moving average. It's trading back near its January 2020 levels. And it's really the only Nordic market that seems to be showing this type of strength. But the daily momentum right now is starting to slow down in the Danish markets. But again, it is the strongest of the Nordic markets, and it's sitting above its major support levels, both on the weekly and daily levels. So we're keeping a close eye on both of those because a breakdown below those support levels puts us in a similar setup as Sweden. And then next, what I want to take a look at is the Norwegian markets. This is really the weakest of the four Nordic markets. And when we look at the earnings, you'll see clearly as to why, because this market is actually trading below the entire 2018 to 2020 range. It's actually, you have to go back to June of 2017 to see where the markets are currently trading. And momentum really has started to turn sideways. And I think this is the market that has the highest probability of potentially moving lower here, being the weakest of the four. And lastly, let's take a look at the Finnish markets, which are currently exhibiting a similar weak setup, similar to Norway. It's trading below its major 3,700 level. So unlike the Swedish markets that are trading slightly above its major resistance support level, the Finnish market is trading below that major support level. And this coincides with the rejection at the 20-week moving average. So the daily chart here doesn't actually look particularly bad, but risks definitely skew to the downside going forward here for all four markets.
All right, Tony, let's take a look at our next chart here with COVID-19 trends and what you're seeing coming out of earnings season.
Yeah, so at this point, 70% of the Nordic markets have reported earnings. So we have a pretty wide spectrum of results to currently look at, and provides, in my opinion, a lot of insights into what the market currently is rewarding. So starting off, looking at Norway, which was, as we identified, the weakest of the four by looking at the charts. If you look at the earnings and revenue, these are both in Norway below 50% in terms of beat. So this is really the weakest of the four markets from an earnings perspective, and we're seeing that in the charts, especially only 20% of the companies are beating on revenue. And I think this speaks to why this market is really the weakest of the four. Next, if we look at Sweden, Sweden's pretty much middle of the road, and the numbers are very similar to what we're seeing here in the US, where you're seeing slightly under 60% of the companies beat on earnings per share, as well as on top line revenue. And this is in line with what the charts are showing. So this makes sense to us. And then when we look at Finland and Denmark, which are on the opposite ends of the spectrum, you have Finland with a really huge earnings per share beats. Over 90% of their companies have beat on earnings, but only 55% have beat on sales. And then with Denmark, where you have very, really poor earnings per share, but really strong revenue. And if we look back to the charts, we clearly saw that Denmark was the strongest of the markets, and Finland was actually particularly weak and trading below their major resistance levels. So this really provides us with the insights that the market is currently rewarding companies that have strong revenues, beating on revenues, and not rewarding companies that have, or not rewarding the markets that have strong earnings per share numbers that are not accompanied with strong sales. So those are some of the insights that we're currently seeing from the earnings metrics coming out of the Nordic markets.
Let's take a look at a couple of option strategies here. The first one with the defensive play in the pharmaceutical sector.
Yeah, so as we were saying, we clearly see that the risks right now skew more to the downside, especially going into what we expect to be a very challenging Q2. So I want to provide two ways that we can play this market. One is a more defensive play, and one is a momentum play. So let's first start off with the defensive play. We want to identify are some of the strongest markets with some of the strongest sectors. So I was looking at Novo Nordisk, which is trading in the Danish markets, as we said, is the strongest market. It is also a pharma stock, one of the strongest sectors. So especially when markets are near tops as we are currently and momentum is starting to slow down, we really want to make sure that we limit our risk. And in this case, one of the best ways to do that is to either utilize call options or call debit spreads, which allow us to gain upside exposure if the markets continue to move higher, but do so in a way with very limited risk. So Novo is trading just around that 430 support, which is usually a good entry for a long, and we expect a continuation higher here. And in this particular case, we found an option strategy that risks only roughly 1440 Danish crowns per contract and makes 2,560 Danish crowns if the stock moves higher back to its all-time highs. So we really want to make sure that we are able to still take that upside exposure, but more importantly, do so in a way with fairly limited risk. And this trade goes all the way out to June, giving us about 45 days here for this stock to continue moving higher.
All right, let's take a look at our second option strategy of the day, momentum in the telecom sector.
Yeah, so within what we wanted to look at is if things started to accelerate to the downside, if these markets started to break below those support levels, how can you play a bearish trade to the downside? So we're looking for stocks that are fairly volatile, that exhibit fairly weak relative strength right now. So we were looking at this Tele2, which is a Swedish company in the telecom industry that was looking particularly weak. If the stock breaks below that 120 support level, we see a quick acceleration to the downside. So we wanted to use put spreads here, similar to the upside that we're looking in the pharma stock, but to the downside, we're looking at using a put spread here to risk only 675 Swedish crowns to try to make 1,075 Swedish crowns if this stock declines roughly about 14 crowns to the downside. So a quick momentum play to the downside gives us close to a 2-to-1 risk reward ratio. These are the types of plays that we want to utilize in this current market environment, especially if things start to roll over and we get some acceleration to the downside.
All right, Tony, and to wrap up here, how can we get in touch with you?
Yeah, so we have this fantastic partnership with Nasdaq, which provides all Nordic investors free access to Options Play, which is the tool I just showed you here, access to the research like the one we just presented here today, weekly options education, reports and scans for opportunities here in the market, and it's completely free of charge and has coverage across all of the Nordic markets. And you can sign up free of charge at optionsplay.se. We're really proud of this partnership, and we're really happy that all Nordic investors can have access to this free of charge.
All right, Tony, great to have you with us as always on Trade Talks.
Thank you so much.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.